With the end of the financial year fast approaching, it's time to start thinking about tax returns. New research from Finder suggesting 9 million Australians are eagerly anticipating refunds amid the cost of living crisis. Tax specialist Maynard is here to talk us through this one. Hi, Michelle.
Hi, Mon.
The research says that 1 in 10 admit it's critical that they receive a refund. Should they be holding out hope here?
Not really. If you're an employee with minimal deductions, you're going to get a minimal refund. Because the low to middle income tax offset was cancelled 2 years ago, those big refunds of $1,500 or more are a thing of the past, unfortunately. So no, holding out for a refund is probably not going to be much this time around.
All right, then how can we prepare for a tax time? What should we be doing now?
So if you want to maximise your refund, you're going to want to maximise your deductions. And the way that you can do that is make sure you keep a copy of all of your receipts and keep a copy of all the records you need to claim. So if you're working from home, that's keeping a diary of the hours worked. If you use your car for work purposes, it's keeping a track of the kilometres. The more records you have means you're going to maximise your deductions, which means you will maximise your refund.
How do we know what we can claim on, and is there an ideal time to file?
Sure. So the ATO has a range of occupation guides, which are fantastic, which tells you what each occupation can and can't claim. So check that out so you know what you should be keeping a record of. Now, I know if you want a refund, you're going to want to file early, but the ATO says hold off until the end of July at least. And the reason they want you to do this is your employer has until the 14th of July to finalise what they call your single touch payroll, your group certificate of years gone past. So wait until after the 14th of July. If you lodge earlier than that, you need to make sure that you're not relying on the pre-fill information the ATO has, because they won't have it. So check your interest, check your shares, check your health insurance information, because if you get it wrong, the ATO might charge you interest on any tax they claw back.
Now, the ATO always has certain groups in its sights. Who's on the hit list this year?
Yeah, they're going for the same old playbook again, Mon. They're looking at work-related deductions. They think they lose about $8 billion a year from everybody claiming a little bit extra. So they're saying if you are claiming work-from-home hours, you need to have kept a diary or timesheets of the hours you've worked from home. If you're using their cents per hour method, you can't claim your mobile and internet on top of that. So they're going to be checking that. They're looking at rental property investors, because they've discovered that 9 out of 10 rental property investors overclaim their expenses or underdeclare their income, especially when it comes to interest deductions and repairs and maintenance. So those are 2 areas that they are focused on. And we know a lot of people have had a side hustle or are earning little bits of extra side income with the cost of living crisis. So the ATO wants to make sure that you're also declaring that so they can get their cut of that as well.
Have you got a top bit of advice to make things easier for next year?
Yeah, records and records throughout the year. The ATO have said that's also an area that they're focusing on. So if you keep copies of receipts, scan them, email them to yourself, use the ATO My Deductions app. The more information you have, the better your claims are going to be, which means the bigger your refund will be at tax time.
Sounds good. Thanks, Michelle.
Thanks, Mon.